Good morning, Cheryl. First of all, today is a green day. We have seen the index, shooting up quite significantly. As my earlier, viewpoint on your channel was that, investors should adopt a slow SIP strategy. I think look at good companies, especially from the large cap space, both the NSE as well as the BSE stocks, and try to accumulate, quality businesses on market declines. I think SIP is definitely a good idea, but obviously, not when the market is touching new highs. So I think you need to time your SIPs also in a very normal, steady kind of market and continue this process for the next, say, 4 to 5 years. I think longer term investments and long term wealth creation happens when you do this consistently and with a little amount of discipline. So I think one has to keep on investing regularly. That is most important, and start investing from an early age. So that is how SIP actually generates a decent alpha and a very good kind of wealth generation for investors. So that would be my message to investors: keep on investing, but keep a time frame of at least 4 to 5 years, and use the market dips to accumulate stocks in a regular, disciplined way. See, this is a company which primarily is an exporting pharma company, largely to the Latin American and African markets. And I think the company has some unique molecules. The company has been recording decent growth in the last, say, 2 to 3 years. Our sense is that, I think if the investor can keep a time frame of at least another 12, 18 months, then whatever initiatives the company has taken in the past, especially in the last 6, 8 months, I would believe that would definitely fruitfully, result in a good upside for the stock. The business also is expected to grow quite significantly over the next, say, 1 or 2 years. So I think here some consolidation can be expected in the near term, but from a medium to long term view, especially 12 to 18 months, I think one should hold on. I think one can easily expect a decent return of at least 15 to 20% on a very conservative side. Definitely, if the earnings are much better than expectations, the stock could get re-rated further. IRCT is a regulated monopoly, Shrishti, and I think if you give a 2 to 3 years kind of time frame, the kind of traffic movement which we have seen in the railway, passenger traffic, I think is definitely poised to grow significantly. More importantly, they have, internet ticketing, which is a very strong, profitable vertical where, EBITDA margins range between 50 to 60%. So I think IRCT is now using the excess cash to build into some new projects like affordable kind of hotels. They're also trying to build in a lot of further improvements to their passenger car trains. So I would believe that the investor needs to take a 2 year view at least. In fact, I would not be surprised that looking at the fact that this business is cash generating, the balance sheet is pretty low on debt, a very high ROC and return on equity. I think the investor can hope to make a good return provided he remains invested here for the next 2 years. So I think in the near term, of course, the stock will remain a little volatile and may underperform. But over the next 2 years, if the investor holds, I think he should make a decent amount of money. So my advice would be to hold on. A dominant player in the automotive battery space. In fact, it's a oligopoly market with Amara Raja and Exide, the only two largest listed players. I think with the kind of growth in the automotive sector, especially the passenger car, two-wheeler, and the commercial vehicle sector, I think Exide is well positioned in the OEM segment as well as in the replacement market. Most importantly, Exide is now looking very aggressively in getting into electric lithium batteries, and for which they've already started making investments. So I would believe that this is a stock which is definitely poised to do well over the next, say, couple of years. So I think in the very near term, prices could remain slightly range bound considering the rise in lithium as well as lead prices. But considering the fact that these metals have also corrected from their peak levels, possibly I think margins could improve going forward with the volume growth kicking in. So I think keep a time frame of 12 to 18 months and continue to hold. I would not be surprised that FY24 could be a very strong year, considering the fact that the market is now looking at very strong top business growth from all the vehicle segments, especially the commercial vehicle, the two-wheeler, and recently most of the two-wheeler companies have started generating double-digit volume growth numbers, which actually bodes well for Exide. See, I think Carborundum is one of the leading players in the abrasive space. And in fact, they have started now working on many products, even for the electric vertical, business segment. My sense is, this is a stock where one has to take at least a 2 to 3 year kind of time frame, considering the fact that the stock has significantly outperformed. Our sense is that in the very near term, the stock could remain range bound. But if somebody were to buy the stock at the current levels, then keeping an investment time frame of at least next to 2 to 3 years is very important. The business is growing. The management, headed by the Murugappa family, is extremely, professional, and where corporate governance is perfectly, very strong. So I would believe that any dips should be used to buy the stock. to build positions in any portfolio, but keep a time frame of at least 2 to 3 years. I think most of the companies which operate in the air conditioning space, Cheryl, have actually gone up significantly, and that is the reason one has to be a little patient here. But I think stocks like Havells looks pretty interesting. You got Voltas also, so Havells would be a better choice. And I think if the investor is looking at the broader cooling market space, then even Symphony at the current levels looks attractive. Keep a time frame of at least 12 to 15 months, because looking at the peak summer this time, expectations are that the volume growth in this summer season could be significantly better for all these companies. So I think Symphony and Havells could be good choices, provided the time frame is at least 12 to 18 months. I think in the very near term, Cheryl, HIKAL is expected to face a lot of headwinds because the entire agrochemical space has seen a demand compression. In fact, not only HIKAL but all the other prominent agrochemical companies have done badly, considering that demand has gone down, the input prices have gone up, and that has resulted in a significant margin erosion for most of the players. So in the next 1 or 2 quarters, we could see these challenges continue. But longer term, definitely agrochemicals has a very strong future ahead, and HIKAL has a very strong portfolio, so they should definitely do well. They're also into the contract manufacturing business, so that should also help them. They have a combination of pharma and agro. So if the investor has a 12 to 18 month kind of time frame, then only he should hold on. In the short term, I don't see any major trigger, but yes, in the longer term, there could be good value which would be made from the current levels.